Hello, my name's Charles Lastic. I'm the Managing Director of Blue Bond Tax Planning. I've been an inheritance tax specialist for more than 18 years and have helped hundreds of clients save millions of pounds in their inheritance tax planning and implementation of our advice. So today's video is around family investment companies and investments into family investment companies as opposed to properties. So welcome back, and today's video is around investments into family investment companies rather than rental properties. Now, if you've got a rental property portfolio and you want to put it into a family investment company, you should watch my video on landlords and family investment companies, which is a much longer video. But basically there are issues around the capital gains tax of properties. Now, what I would never do is to mix a family investment company with a property rental family investment company. If necessary, have two family investment companies. The reason is that when you've got a bunch of investments, you're never going to be sued because something goes, you lose money on your investments, right? So effectively that's pretty safe having it in a company, but having rental portfolios, if a tenant dies, then they can sue you for the assets in the company. So keep it separate is the point. But can you set up and put investments in? Yeah, with a property portfolio, we're normally recommending partnerships first, hold it for 3 years, then incorporate. But with a investment portfolio, you've just got to watch the capital gains tax on selling down your investments and putting the cash effectively into the company. So generally cash goes into the company. Now, one of the major benefits of that is, of course, you can swap the cash for directors' loans. And let's just say you're putting in £1 million of cash and you say, well, okay, I need £50,000 a year for the next 10 years. Well, you can get that £50,000 a year out of the company as a return of capital, completely free of any income tax. So that's a major benefit. Now, of course, the director's loan is still in your estate for inheritance tax, so ideally you don't want to be keeping director's loans past 75, but you can even give up the director's loans to your children, provided they are employees of the company. So investments into family investment companies, when are they suitable? Well, usually we would look for people to put 650,000 if they're a married couple, or 325,000 if they're a single and divorced or widowed person, into a trust, because if it goes into a trust, pretty much you can be certain there will be no comeback on that for inheritance tax purposes. Where with family investment companies we can't be certain. However, if your portfolio exceeds 1 million and you're not going to live 14 years, in other words, you can't put money into trust now and put another lot in 7 years time, what are you going to do? You could buy business relief plans, but if your asset base is much higher still, of course business relief plans attract quite a high level of risk because they're invested in single companies. So a family investment company for an investment portfolio is certainly worth considering for people who've got high investment portfolios. So I'm saying over £1 million if you are single, over £1.5 million if you're a married couple. So big advantages, and yes, you definitely can use it, because with trusts, of course, you're limited as an individual to 325,000 per person per 7 years. And if your portfolio is of a size and that isn't going to be enough to get all of your assets out of your estate, then family investment company is a suitable alternative. Okay, so talk to us about it. We've set up a fair number of these for clients now. But if you found that video useful, please give us a thumbs up and a like. It's appreciated. But thanks for listening, and goodbye for now. Bye.